They named it beautiful. They actually put the word beautiful in the title of the bill. And I gotta hand it to them, that takes nerve. Because buried on page 400 and something of this so-called One Big Beautiful Bill Act is a financial satisfying bear trap with your name on it. The bait, tax cuts, simplification, less government in your life. Sounds great, right? Everybody loves that. But the steel teeth underneath, those are the parts they don't put in the press conference. Those are the parts that are about to hit your insurance premiums like a freight train. And if you don't know what just happened, if you haven't read the fine print, and let's be honest, nobody reads the fine print, that's what they're counting on, then you are standing on the trigger plate right now and you don't even feel it yet. So today I'm going to walk you through exactly what this bill actually does to your health insurance, your out-of-pocket costs, and your family's financial safety net. Not what they told you it does, what it actually does. And I'm going to show you the one clause, the one specific provision that is going to blindside millions of Americans in the next 12 months. But we'll get to that. First, you need to understand how the trap was built. If you're not subscribed to this channel, do it right now. I'm serious. Because the financial landscape is shifting underneath your feet every single week, and if you're not paying attention, you're the one who pays, literally. All right, let me set the stage. You remember the Affordable Care Act subsidies, right? Those enhanced premium tax credits that kept marketplace insurance somewhat, and I use that word generously, somewhat affordable for working families. They were expanded during COVID. Both parties actually agreed on that for once. Those subsidies helped roughly 15 million Americans afford coverage. 15 million. That's not a rounding error. That's a mid-sized country. Now here's where the magic trick happens. The One Big Beautiful Bill Act, this gorgeous, patriotic-sounding piece of legislation, it lets those enhanced subsidies expire, but it doesn't say that on the front page. No, no, no. On the front page it says tax relief and healthcare freedom and personal choice. You know what personal choice means in Washington? It means you're on your own. It means they just handed you the bill and called it liberty. Let me tell you about Alex and Jamie. You know Alex and Jamie. Maybe you are Alex and Jamie. They're in their late 30s, 2 kids, both working, not rich, not poor, just grinding. They got their health insurance through the marketplace because Jamie's employer doesn't offer coverage and Alex is self-employed. They were paying about $600 a month for a decent plan. Not cheap, but manageable. They budgeted for it. They planned around it. They did everything right. Then the renewal letter showed up. $1,140 a month. That's not a typo. That's an 89% increase in 1 year. Not because they got sick. Not because they filed some massive claim. Because the subsidy that was keeping their premium in check just evaporated. Poof, gone. Thanks to a bill with the word beautiful in the name. Alex stared at that letter for 10 minutes. Jamie cried. And their senator was on TV that same week, talking about how the bill was going to empower American families. Empower them to do what exactly? Choose between health insurance and groceries? And you think that's bad? Oh, we're just getting started. Wait until you see what they did to the deductibles. That's coming. But first, let me explain the deeper mechanism because this isn't just about subsidies disappearing. That's the obvious part, the part they figured you might notice. The real damage is structural. See, this bill also restructures how Medicaid eligibility works in several states. It introduces work requirements, which sounds reasonable on the surface. Sure, everybody should work. I get it. But here's the practical reality. You've got a single mom working 2 part-time jobs, neither of which offers insurance. She's working 45 hours a week across 2 employers, but because neither job is technically full-time under the new definition, she doesn't meet the work requirement threshold for the specific reporting period. She loses coverage, not because she's lazy, because the paperwork doesn't match the bureaucratic definition of working. That's not policy. That's a paper shredder disguised as reform. And it gets worse. The bill creates these new health savings mechanisms, these Trump accounts, they're calling them. On paper, beautiful concept, right? Tax advantage, portable, yours to keep. But the contribution limits are modest. The tax benefit primarily helps people in higher brackets. And for someone like Alex and Jamie, who are already stretched to the breaking point, being told to save more money in a special account is like telling someone drowning to just drink the water. It's not a solution. It's a punchline. Now, here's the part I told you was coming. The deductible shift. Under the restructured marketplace rules in this bill, insurers are given more flexibility in plan design. Flexibility. That's the Washington word for we're taking the guardrails off. What that means in plain English is that the plans available to people like Alex and Jamie can now carry higher deductibles with fewer mandated coverage minimums. So not only is your premium going through the roof because your subsidy is gone, but the plan you're now overpaying for covers less. You're paying more for a worse product. In any other industry, we'd call that a scam. In healthcare, they call it consumer choice. You know what kills me? Politicians, and I mean both sides here because let's not pretend this is a one-party problem. Politicians are somehow worse than used car salesmen. At least the used car salesman has the decency to let you kick the tires before he robs you. These folks package a bill in red, white, and blue wrapping paper, slap the word beautiful on it, and then act shocked when people get hurt. We didn't know, they say. You didn't know? You wrote the bill. You voted on the bill. You did a press conference in front of the bill. You knew. All right, enough rage. Let me help you, because that's why you're here. You don't just want to know about the trap. You want to know how to get out of it. So here's what you do right now, today, this week. First, pull up your current insurance plan documents. Not the summary card, the actual plan document, the one nobody reads, the one that's 40 pages long. You're looking for something called your Summary of Benefits and Coverage, your SBC. Specifically, look at line item 7 and line item 12. Line 7 shows your premium subsidy amount, or the absence of it. Line 12 shows your out-of-pocket maximum. If that out-of-pocket number jumped by more than 15% from last year, you've been restructured under the new rules. You've been trapped. Second, check your plan's metal tier, bronze, silver, gold, platinum. Under the new flexibility rules, some silver plans have been quietly restructured to carry what used to be bronze-level deductibles. The name didn't change, the coverage did. Same label, less protection. It's like ordering a steak and getting a hamburger patty on a fancy plate. Check whether your deductible matches the tier you think you're paying for. If it doesn't, you need to switch plans during the next enrollment window. And yes, there are special enrollment triggers you can use. I'll talk about those in a future video. Third, if you're on Medicaid or your kids are on CHIP, Verify your eligibility status right now, not next month, now. Because the redetermination process under the new bill is accelerated. And if you miss a piece of paperwork, you can lose coverage with almost no warning. States are processing these faster than people can respond. Call your state's Medicaid office or go to healthcare.gov and confirm that your coverage is active and your information is current. Fourth, and this is the big one, if your income is between 150% and 400% of the federal poverty level, you are in the kill zone. That's the income range where the expired subsidies hit the hardest. For a family of four, that's roughly between $45,000 and about $120,000 a year. That's most of America. If that's you, start shopping alternative plans right now. Don't wait for open enrollment. Look for qualifying life events, job change, address change, birth of a child, anything that opens a special enrollment period. Use it. Did your premium go up this year or did it somehow go down? I genuinely want to know. Drop it in the comments. Tell me your state. Tell me your percentage increase because I'm tracking this. I'm building a map of where the damage is worst and your data point matters. And while you're down there, hit the like button if you were tired of being ambushed by the fine print. Now back to Alex and Jamie because I don't leave people hanging. After the initial shock, after the anger and the tears and the what do we do now conversations at the kitchen table, they did the work. They pulled their SBC. They found the discrepancy. Their silver plan was carrying a $6,500 deductible, which is not silver. That's bronze in a silver costume. They found a qualifying event. Jamie had a shift in employment status, and they switched to a properly structured plan during special enrollment. Their new premium, $780 a month. Still more than before. Still painful, but survivable. They cut the deductible nearly in half. They didn't get saved by the government. They saved themselves by reading the document that the government was hoping they'd ignore. And Jamie joked that at least they could still afford ramen. 2 packs each now instead of 3. Progress. Look, I'm not here to tell you which party to vote for. I genuinely don't care. What I care about is that you see the trap before it closes. And this bill, this beautiful bill, it is a masterclass in making something dangerous sound harmless. Don't fall for the name. Read the document, protect your family. But here's the thing. Healthcare isn't the only trap they set in this bill. If you drive a car, and I'm guessing you do, you need to watch the next video I'm putting out. It's called Why Your Car Insurance Doubled in 2026. And spoiler, it's not just because of accidents. It's because of what happened to the parts, the actual physical parts that go into your car. That story is wild and it connects directly to what we just talked about. I'll see you there.